Good morning, students. We shall pass on to the problem number 4 under company accounts chapter. Fourth problem in the exercise. Gajal Limited issued 40,000 shares of rupees 10 each to the public, payable rupees 2 on application, rupees 5 on allotment, and rupees 3 on first and final call. Applications were received for 50,000 shares. The directors decided to allot 40,000 shares on pro rata basis, and the surplus of application money was utilized for allotment. Pass journal entry assuming that the amount due was received. Past journal entries assuming that the amount due was received. So, what is the speciality in it? One thing, the company issued only 40,000 shares, but the applications were received for 50,000 shares. What happens in that case? Company issued 40,000 shares and number of applications received 50,000 shares for 50,000 shares. In that case, I taught you in other classes also, there are two methods of allotting the shares. One, the first come will be served first, and the excess share application money will be refunded. That is one point. Second one, nobody's application will be rejected. Everyone will be allotted. How? They, out of 40,000 shares, 50,000 applicants should be satisfied. How? Those who have applied for 5 will be allotted 4. So, those who have applied for 10 will be allotted 8. Those who have applied for 15 allotted 12, that is 4. Then 1 5, 1 4, 2 5s, 2 4, 3 5s, 3 4. So, what this is called in mathematics? Proportion. Proportion. This is called the proportion. And since this allotment is made on the basis of proportion, it is called proportionate allotment. That is why in the problem given, shares on pro rata basis. Allotment on pro rata basis is allotment on proportion. That is proportionate allotment. That is proportionate allotment. So, this is how it is allotted. In the first case, the amount will be refunded. In this pro rata basis allotment, the SX application money will be adjusted with allotment. Excess application money will be adjusted with allotment. Okay, now we are going to see that. As usual, we can draw the columns. in the books of Gaja Limited, journal entries, date, particulars, ledger folio, debit and credit. The date given in this problem, nothing, no date is given, the date column will be kept vacant. We shall pass on to the journal entries. As I said in the beginning, we can draw another column for journal entries. Date and here the particulars. Ledger folio as usual, debit and credit. Okay, the same thing. I hope I need not write the same heading. So 40,000 shares were issued, 2 on application. So the first case, bank account, debtor to share application account. Application money on 50,000 shares at the rate of rupees 2 received and the second journal entry for the first stage, application stage, share application account debtor to share capital account, share capital account. Narration, application money on 40,000 shares transferred. Application money on 40,000 shares transferred. Here it is 50,000 shares, 50 into 2, 1 lakh. But here only 40,000 shares, 40 into 2, 80,000. 80,000. 40 into 2, 80,000. You must be very careful because the share application money is transferred to share capital account only for the number of shares issued by the company. Though the applications received for 50,000 shares, the number of shares issued by the company is only 40,000. Therefore, 40,000 share application money only will be transferred to share capital. This is very important. You will bear it in mind. Okay, then second stage. Second stage, allotment stage. 5 rupees on allotment. So, what should be the first journal entry? Share allotment account. Debtor to share capital account. Allotment money due. Due at the rate of rupees 5. At the rate of rupees 5. So 5 into 40,000, it is 2 lakhs. 2 lakhs. 2 lakhs. Then the second journal entry. The second journal entry will be bank account debtor to. Second journal entry will be bank account debtor to share allotment account. Bank account debtor to share allotment account. This should be the journal entry for the allotment stage as the second entry. This is the second entry, I don't know. But there is a speciality in it. What is the speciality? Number of applications received 50,000 shares for 50,000 shares, but number of shares issued by the company is only 40,000 shares. So there is an excess money for 10,000 shares, that is 10,000 into 2, 20,000. That is 1 lakh minus 80,000, 20,000. What should be done? What the amount should be done? So for that there is an instruction. What it is? The directors decided to allot 40,000 shares on pro rata basis, and surplus of application money. Surplus of application money. How much is the surplus? Application money received 1 lakh, but actual application money 80,000. How much is surplus? 20,000. That 20,000 should be utilized for allotment. 20,000 rupees should be utilized for allotment. Then what we must do for it? Share application account debtor to share allotment account. How much? 20,000. Here for 2 lakhs Already 20,000 application money was available. It is kept as reserve. Therefore, balance amount 1,80,000 only will be received by the company. So, what should be the narration here? Excess application money adjusted with allotment. Here balance share, balance allotment money. Balance allotment money received. Then, regarding the third stage, 3 on first and final call. 3 on first and final call. This is the first stage, this is the second stage, and the third stage will be first and final call. Share first and final call account data to share capital account. Share capital account. Call money due. Call money due at the rate of ₹3. So 3 into 40,000, 1,20,000 we should write. 1,20,000. 20,000. When the money is received, bank account. Data to share first and final call account. Call money received. The same 1,20,000. This is the answer for fourth question. I know some of you may not understand it, why the entries are different. So once again I repeat. Here, when I am writing the credit items, I simply wrote share application account, share allotment account, share capital account. I did not use equity, the word. First thing you should understand, because nothing is given in the problem. Gaja Limited issued 40,000 shares. What type of shares? Whether it is preference shares or equity shares or ordinary shares, nothing is mentioned. Therefore, I have used simply the term share. Or else, if it is equity share, everywhere, wherever I have written share, I should write equity share or preference share. Okay, that is the first point. Then, second point, the first one. I said in the beginning itself, the number of shares issued by the company is only 40,000. But number of applications received for 50,000 shares. If there is excess application, in otherwise called in accountancy what we call over subscription. If the subscription is over, that is above the number of applications, number of shares issued by the company, கம்பெனி இஷ்யூ பண்ணதை விட அதிகமான ஷேர் அப்ளை பண்ணியிருந்தாங்கன்னா how it should be treated. In two cases, in two ways it can be treated. One, the first come will be served first. That's what I said. முதல்ல வரவனுக்கு முதல்ல கொடுத்து அனுப்பிச்சிட வேண்டியது. The excess application money will be refunded to the applicants. And in that case, they will send a letter of regret, which is called the letter of regret, stating that, see, the company is not in a position to allot any number of shares to you. It is regretted, so the amount is refunded. They will send a letter and refund the money. That is first case. What will be the second case? Second case is called, just now I explained, I wrote it here, pro rata basis. How the shares are allotted on pro rata basis. 40,000 shares are available, but 50,000 shares application is received. So, when 5 shares are applied for, 4 shares will be allotted. When 10 shares are applied for, 8 shares will be allotted. When 15 shares are applied for, 12 shares will be allotted. That is for 5, 4, 10, 8, 15, 12. That is, it is allotted proportionately. That is why it is called proportionate allotment. In short form, we call it pro rata allotment. So, the pro rata allotment only it is allotted. Okay, that is first case over. Then how to fill up the amount? See, it is the routine or it is the normal procedure of any company. Whatever the number of applications applied for, the money will be received by the company, that is by the bank. See, even if there are 20,000 shares, even if it is applied for 1 lakh shares, all the money will be received first. Okay, and therefore, for the first January, bank account debtor to share application account 50,000 into 2, 1 lakh account. You can see the narration. Application money on 50,000 shares at the rate of ₹2 received. Okay, we have completed. But if here application money on 40,000 shares transferred, how much can be transferred to the share capital? Only the number of shares, for the number of shares issued by the company, only can be transferred to share capital. Share capital. Here the number of shares issued by the company is 40,000. Therefore, 40,000 into 2, 80,000. Here it is followed. Okay, then what happened to the 20,000, excess 20,000 money? It is given there in the problem itself. I read once again I read it. See, on pro rata basis, and the surplus of application money was utilized for allotment. So the surplus is 20,000, 1 lakh minus 80,000. 20,000 will be utilized for allotment, because for allotment also they should receive the money. They should receive the money. How much? At the rate of 5 for share, for each share. So 5 into 40,000, 2 lakh, the company should receive. And out of this 2 lakhs, 20,000 excess will be adjusted, and remaining 1,80,000 only will be received from the shareholders or the applicants. You should understand. 2 lakhs to varano allotment, அதில் 20,000 ஏற்கனவே எக்ஸஸ் ஷேர் அப்ளிகேஷன் பண்ணி இருக்கு. அப்போ 1,80,000 மட்டும்தான் allotment பண்ணக்கூடிய the share allot பண்ண applicants இருந்து the company can receive. So this is, and that is why share application account, this entry is very simple. Application is transferred to allotment. Therefore share application account data to share allotment. Generally is very simple. And 20,000, this is excess application money adjusted with allotment. Okay. Then what should be the balance amount to be received in the name of allotment? For 2 lakh, 20,000 application money transferred, that is adjusted, and therefore the balance 1 lakh 80,000 only should be received from the applicants. Therefore, bank account data to share allotment account, that's what we have written. Then the third stage, usually in some problems they give 4 stages, but in this problem, first and the final call are combined together and they have made it into a single stage. Therefore, share first and the final call account data to share capital account. What is the amount? 3 rupees per share. Therefore, 3 into 40,000, 1,20,000. Call money due at the rate of rupees 3. Then, here the second journal entry for this stage, bank account data to share first and final call account, call money received the same 1,20,000. But there should be a difference between the first stage and the second and the third. I reminded you already, once again repeat it. In the first stage, 1 and 2 becomes here 2 and 1. This journal entry will come here, this journal entry will come here. Only for application stage, the entries are different. Same entry, but the places are different. This will come as a second, this second entry will come as a first. But we should change the stage name. Okay, the same thing for first call, final call, whatever it is, the same thing for it. But you should listen very carefully. The narration also. Narration also you should listen. What is the narration? Why this first and the second becomes here, second and the first? Because for the application stage, the first money will be received, then that money will be transferred to share capital. That is the first case. Whereas from allotment stage, allotment, first call, final call, whatever the stage, first a letter will be sent by the company to the shareholders, asking them or requesting them to pay the allotment money, to pay the call money. That is why the first journal entry, allotment money due, call money due, betting panatha kattida appdinu solraanga. This is that. For that purpose only the journal entry is given here. So that is why the narration is given, allotment money due at the rate of whatever the amount given in the problem. Here call money due at the rate of. And after seeing this message, letter, this is for the letter sent to the shareholder. After seeing the letter, the shareholder will pay the amount for that. Bank account data to share allotment, bank account data to share first and final call, bank account data to share first call, bank account data to share final call, whatever it is, this we should write. So this is the major difference between the first stage and the other stages. You should bear it in mind.